Attention investors! Some stocks that look promising now could be your biggest financial mistake in 2025. Overvalued companies, businesses burning through cash, stocks that are running on pure hype. In this video, I'll break down the worst stocks to own in 2025 and what to invest in instead. Make sure to watch until the end because I'll share 3 alternatives that could outperform these high-risk plays. The overhyped AI stocks bubble alert. AI stocks have exploded in 2023 and 2024, but not all of them are winners. Some companies are riding the AI wave with zero innovation or profitability. Examples of AI stocks that could crash: C3.ai, low revenue growth, struggles with profitability, trading at sky-high valuations despite limited adoption. Palantir, PLTR, overvalued with an extreme PE ratio, too much reliance on government contracts. Stock has been volatile with little earnings growth. Listen, not all AI stocks are the next Nvidia. How to spot a bad AI investment: high PE ratio, meaning it's overpriced. No real-world adoption or revenue growth. Constant hype without results. Meme stocks and speculative plays: gamblers, beware. Meme stocks made some traders rich in 2021, but history doesn't repeat itself in the same way. Stocks like GameStop, AMC, and BlackBerry saw massive gains due to retail traders, not fundamentals. Why these stocks are still dangerous in 2025. No business growth equals purely speculative. Hedge funds and institutions have already adapted. If you don't sell at the right time, you'll be left holding the bag. Case study: Bed Bath & Beyond, ticker BBBQ. Traders tried reviving it as a meme stock. The result? It went bankrupt and people lost their entire investments. Don't get caught in the hype. Long-term success in the stock market comes from investing, not gambling. High-risk EV stocks. Not every EV is Tesla. Many EV companies are struggling due to supply chain issues, high costs, and demand slowdown. High-risk EV stocks to avoid. Lucid Motors, ticker symbol LCID, is burning through cash at an alarming rate. Sales are not meeting expectations and they are facing strong competition from Tesla and BYD. Rivian, ticker symbol RIVIN, has high production costs and reports heavy losses every quarter. They need massive demand to survive, which isn't happening yet. Lesson: the EV market is brutal. Many of these companies won't survive unless they drastically improve their business models. An alternative? Stick to Tesla, ticker symbol TSLA, or diversified ETFs like Vanguard Consumer Discretionary ETF, ticker symbol VCR, that hold the best EV plays. Companies with massive debt interest rate traps. Rising interest rates have made high-debt companies extremely risky. Companies that took on cheap debt in the past are now struggling. Debt-heavy stocks to avoid. Let's start with AT&T, ticker symbol T. They have over $140 billion in debt. Their stock price is down over 50% from its peak. They're paying high dividends but struggling to generate real profit. Now, moving on to Nikola, ticker symbol NKLA. They've faced fraud allegations in the past, have high debt and cash burn, and, well, no real market presence. What to invest in instead? Look for companies with low debt, positive cash flow, and strong balance sheets. For example, Apple, ticker symbol AAPL, uses debt wisely, generates strong profits, and dominates the tech sector. So what should you do? Avoid stocks that are running on pure hype. Steer clear of debt-heavy companies struggling with high interest rates. Invest in strong businesses with real earnings growth. Better investment ideas? Consider index funds and ETFs like VTI, VOO, and QQQ. Look into dividend stocks with low debt, and keep an eye on tech and AI leaders such as Nvidia, Google, and Microsoft. For more stock picks, watch Best Stocks to Buy Now, beginner-friendly. My top 3, 2025, and I tried 6 passive income strategies for stocks. Which stock do you think is the riskiest in 2025? Drop a comment below, like, subscribe, and turn on notifications for more investing insights.